As the crypto market has started to recover over the last couple of days, many investors are starting to ask me questions here and over in the school and over on Instagram, wondering whether or not we are back. So many of us are just sick and tired of the losses and the manipulation and the boringness and the red that we've been getting from this market for the last few months. And every time we get a little moment in the market where it feels a little bit better, I think we just immediately start jumping to the best, like, okay, maybe this is the moment. Maybe this is the moment that we're back. And although it is, exciting to feel that way and it feels good to feel that way, I do believe that this can be a little bit bad for you. And I think that just solely relying on how you feel to determine that we are back in a bull market or not is only going to lead you to losses. And so in today's video, what I want to do is I want to give you the three things that I am looking for from a technical perspective in order to confirm that we are back in a bull market, to confirm that we are going to likely see gains, and to confirm that it might be a good idea to start opening up those leverage long trades and start getting back in the game. And so these three things are going to be centered mostly around a technical perspective. And I do want to make one thing clear. Just because these are solely technical doesn't mean that the fundamentals, such as the macroeconomic data and all of those things, it doesn't mean that those things don't matter. We're just going to get to those in a future video. But in this video, let's focus in on some of the technicals and talk about what we're looking for and why it's so important. Now, starting with number one, and they're all going to lie here on the Bitcoin chart, comes down to this descending channel. What you can see here, let's just get rid of everything for now. What you can see here is that Bitcoin's price has been stuck in what's called a parallel descending channel. And a parallel descending channel, quite simply, is what you would think. It's a parallel channel that's going down, right? And what you can see here is that this has been the point of resistance that's been forcing the price downwards and the point of support that's been holding the price upwards. And one easy thing to understand is that while Bitcoin's price is in a descending parallel channel, it cannot pump, it cannot go higher, it cannot rally. Because while there is a descending level of resistance above us and a descending level of support below us, we will consistently make lower lows and lower highs until we don't. And so anytime that we're in this descending channel, although it's okay to get optimistic or excited or whatever you want, you have to understand we're not going anywhere while we're in it. And so the easiest thing to do right now is just to assume, okay, even every single time that we pump to the upside, it's just a trap. It's just a trap. Think about it. That is the case. Until we break out of this descending channel, every single pump that we see within it is a trap. This one was, and hell, this one very well might be. Because they are consistently running into a massive level of resistance that's forcing the price back down to set lower lows. And so one easy thing to do here again, and I'm not even going to stay on this one very long, is just to understand that while Bitcoin's price is within this parallel descending channel, we are not going to go anywhere. There is not going to be a pump. There's not going to be a rally. There's not going to be a banana zone. There's not going to be any of those things. Anyone who tells you that there is simply guessing, because it is a 100% chance that Bitcoin's price keeps falling while we are in a descending parallel channel. Easy peasy, simple as that. Okay, now moving into the next one. That's step number one. That's confirmation number one. The second confirmation I'm looking for comes down to the 50-day moving average. Now, before I tell you why the 50-day moving average is so important, I will tell you this. I did post all of these things over in the school earlier this morning. I talked about the 50-day moving average. I talked about the descending wedge. I talked about the next thing. I posted the screenshot and much more. And I will let you know, if you do want to get access to all of the things that I'm talking about here on the channel, my trades, my insights, coaching classes, workshops, and much, 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 much more, all of it is available down in the school for you down below. Guys, what we do is we take crypto investors like yourselves. We give you coaching and workshops, classes, signals, insights, strategies, and much more to help you refine your strategies and to turn you into winning investors. Because the reality is a strategy is what creates a winning investor. And the best part about it is it starts as little as $5 a month. And if you don't see growth within 12 hours of joining, we'll just give you your money back, because that's how confident we are. I have never seen a community generate as many gains as this one has. I mean, you can see this. This is just in the last couple of days. The absolute sheer amount of gains. I'll just let it go. I mean, look at it. I'll just let it go. You can see the sheer amount of gains just in the last couple of days. So if that interests you, the link is down below. Now, moving into the next one. What do we need to see from the 50-day moving average? Well, the 50-day moving average is just an accumulation or an average of the last 50 days worth of prices, or it comes down to just quite simply being this yellow line. Now, this yellow line right here tells us the portion of the trend that we're in from a bullish or bearish perspective. And what I mean by that is just simply this. If we're above the 50-day moving average, we are generally in a bullish period on the daily time frames. If we're below the 50-day moving average or this yellow line, we are in a bearish period on the daily time frames. And so what you can easily do is just look at this 50-day moving average and recognize one thing. Listen, we're below it right now. We're under that 50-day moving average. And while we're below that 50-day moving average, historical data shows that we're not going to go anywhere. We're not going to be able to see any real growth. Look at what happened back here. Do you see how we had these moments where we kept falling down below it, and then we'd recover above it, but we couldn't hold it, and we fell back below it? Recover above it, and we couldn't hold it, and we fell back below it. Recovered above it, and we couldn't hold it, we fell back below it, right? Do you see how every time that we're either below this level or failing to hold this level, we are simply just not going anywhere? We're not gaining any traction. We're not making any growth. This is what I'm talking about. But do you see how this time, when we break above the 50-day moving average, we hold above it, we build support, and then we start rallying, it puts us in a position in which the market actually can start seeing some growth? That's what I'm looking for. And so in a moment like right now where we're just sat below the 50-day moving average, you can't just assume that just because we're pumping a little bit, it means we're back. Because the reality of it is we still need to break above that 50-day moving average. Guys, we still need to hold that 50-day moving average. And until that happens, we are in a bearish period, a bearish trend on the daily time frames, and we are not going to go anywhere. And that's just the harsh reality of it. And so the next step here, confirmation number 2, the second thing that we need to see is whether or not we can break above that 50-day moving average and hold it. Because I don't want to just break above it. Like as I showed you back here before, just breaking above it doesn't do anything for me. We need to break it. We need to hold it like we did here. Because again, historical data shows you what happens when you're below it. I mean, just go look at the bear market, guys. Look. We fell below it. We stayed below it. We tried to come above it. We failed to hold it. We fell below it. We failed to hold it. We fell below it. We failed to hold it. We fell below it. Yada, 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 yada. You get the point. While we are below this 50-day moving average and failing to hold it, we are not going to see a pump. We're not going to see a real rally. And anytime this market rallies while we're below it, it is simply just a trap. That's all. That's the only way that you need to look at it, in my opinion. Now, the very last thing that needs to happen in order for me to really believe, like, okay, this is the real confirmation that we are back, is that we need to break the Fibonacci golden zone. You all know I am a massive proponent of the Fibonacci golden zone. I am genuinely under the belief that the Fibonacci golden zone is the easiest and the most effective indicator to use in all of crypto. It is so accurate that I've developed the majority of my entire trading strategy off this is one indicator. And what you can see here is that the golden zone or the golden pocket is currently sat between $101 and $95,000. What this means in very simple terms is while Bitcoin's price is below this golden pocket or the $95,000 to $101,000 level, we are not capable, able to, even thinking about seeing all-time highs. This banana zone that everyone talks about will never happen while Bitcoin's price is below this current golden zone of 95,000 to 101,000. And the reason being is because this is the level that is the most likely to reject the Bitcoin's price back to the downside. This will be the strongest, most important level of resistance that Bitcoin has seen within the last couple months. And while Bitcoin's price is below this massive level of resistance, there is no point in even thinking about all-time highs because it's that strong. Now, if Bitcoin's price decides, okay, hey, this is my time, and it breaks above this golden zone and it starts opening up that door, then oh yeah, baby, we're back. And this bull market very well might continue. 120,000, 136,000 may very well happen. But that is all just optimism. That's just hopium. That's just hoping for the best because the reality is we're not even close to this golden zone right now. And we would still need to break this golden zone in order to confirm that the bull market is back. And that is why I saved this one for last because it's going to be hard and it's going to be difficult and it's going to take a while and it's not going to be easy. And I know you don't want to hear that, but it's what you need to hear. But when the time comes that Bitcoin's price does break that golden zone, guys, because the day will come, man, oh man, is that going to open up a wild door for some absolutely wild moves. I mean, look at what happened the last time we broke the golden zone. You can really see how this played out. Look, let's just go here. And let's draw on this golden zone from this previous all-time high. Do you see what happened here? Do you see how we worked our way up to it a couple times, but we couldn't clear it? Like here, right here. But we finally broke it this time, and then we back tested and absolutely took off all the way up to that $109,000 level, yeah, that's what happens when you break a golden zone. And so you want to know when I'm really going to get optimistic, when I'm really going to think we're back, when I'm really going to start opening up those big trades, it's when we break that golden zone, because that's the thing that's going to open that door. And so those are my three things. Okay. Those are my three things that I need to see. First and foremost, are we going to be able to go in and are we going to break the descending channel? Look, let's go all the way back now. Give me 1 second. Let's go all the way back here. Boom. Are we going to be able to break the descending channel? That's number one. Remember, while we're in this descending channel, it is impossible for us to rally. Easy to understand. It is impossible. The second thing, while we are trying to break this descending channel, is can we break the 50-day moving average? While we are below the 50-day moving average, we're not in bullish territory. We're not rallying. We're not seeing anything good happen. The reality is we're just in recovery or just some sort of bull trap. That's just the case, okay? And then the third thing that we need to see is the golden zone breaking. If we can break that golden zone, that completes the trifecta. And it puts us in a spot to where we can really see some rapid growth, some rapid recovery, and it'll really open that door. If you want to see Bitcoin at 120K, this is the thing that gets us there. With these three things, I will then say the bull market is back. Until these three things happen, I will not say that the bull market is back. I will not say that we are in the banana zone. I'm not going to say anything super optimistic, because the reality is that the data shows that while we are below these three things or within this descending wedge, we are not back in the bullish period. Simple as that. And so this is a way for me, and I know this doesn't seem the most optimistic, and I know many of you aren't going to want to hear the things that I'm saying in this video, but listen, the reality of it is this. You can either trade based off your feelings or you can trade based off of data. You get to pick. But what I'll tell you is that those of you who are trading based off your feelings will keep losing, and those of you who will trade off your data will most likely win. And the data shows that we need these three things to be back. So I don't care if I feel good, if my portfolio's up, if everything's optimistic, if some crazy bullish news comes out. I do not care. The reality of it is that when these three things happen, we can say we're back. If these three things don't happen, we can't say we're back. And that's the hill that I'm willing to die on, okay? And so with that in mind, I'll continue to update you on our progress as this continues to happen. But what I don't want you to forget is this. If you do want to get even more updates, go check out the school. If you are someone who is brand new to the world of crypto, I want you to head down to the link down below and go get my free beginner's guide. It's like 10, 15 pages of just free value for you to get started in the world of crypto. And if you are someone who is a trader who is experienced and knows what they're doing, head to the link down below and go get your 10% bonus on all first-time deposits between $500 and $100,000 over on BTCC. This is the platform that I do the majority of my trading on. It's very clean, very easy. And for example, if you deposit $10,000 on this platform to start trading, they're going to give you an extra $1,000 to start trading with. And whatever money you make from that $1,000, you get to keep, which is an absolutely nuts deal. So go check that out. All of these things will be linked down below, and just keep a very, very, very close eye on the trifecta. These are the three things that we're looking for. And until they happen, don't get too far ahead of yourselves, because you're going to end up in a really weird situation. Okay, so those are my thoughts. Those are my ideas. Let me know what you think down in the description below, and again, or in the comments below. And don't forget to go check out that description. Check out some of the links that are available for it there for you. And I can't wait to see you all in the next one. Peace out, everybody.